Hello, I'm Mark Starosciak, Managing Partner with Infinium Investment Advisors. You have tuned into our market update for June 4th, 2013. As a reminder, anything we talk about today is purely for informational purposes. It is not a solicitation to buy or sell securities or follow any investment strategy. Infinium does not provide tax or legal advice, and always consult your own financial advisor before making any investment decisions. Well, this slide kind of sums up everything that's happened this year, and that is Mr. Market says take your medicine. Things are a lot better, from the economy to jobs to a variety of different indicators that you can look at. The world is a better place, and the market's making you pay if you've been too conservative here. That's been a big problem for many investors. We talked about this especially last fall. We said, look, the biggest risk out there is opportunity cost by being too conservative in this market. And sure enough, that's played out in spades. And so for all those doomsdayers out there, in particular the folks maybe that sold stocks and went to gold or precious metals, we'll show that in a second, just what a absolutely horrible trade that's been. And it's been hugely costly for investors. So, the market moves in a way that deals the most pain to its participants. And this year it's been up. That's something we've been talking about for a while. So the question is, why? Why are we here? Is this just, phony baloney, or what's going on? Well, the economy is getting better. Housing is recovering. There's no doubt about that. Employment is up. We'll show that in a slide. Retail spending up. Interest rates relatively low. And central banks continue to pump money into the system. We'll also talk about that a little bit. And Europe's been quiet, so that's been one of the big, roadblocks to the markets in the last couple of years, especially, has been Europe, and that's been relatively quiet. So there are really fundamental reasons why the markets are doing as well as they are. So this is an interesting slide. What this shows is inverted jobless claims. So, as jobless claims go down, which is this number here on this side of the y-axis, the markets tend to move up. So it's an inverted jobless claims with stock prices. And you can see the very tight correlation here. This is something we're watching very closely at Infinium, that if you start to see those jobless claims move up, more than likely this market has reached somewhat of a top, and we could be there actually right now. We've seen jobless claims inch up most recently. If jobs soften, expect this market to probably trade sideways at best. But nonetheless, this is a real reason why the markets are moving the way they are. Back in the previous slide, we showed the cash pumping into the system by all the central banks. And that's a myth that exists out there today. That's the only reason why the markets are doing well. Simply not the case. More people are finding work. Now, there's debate about those people, participation rate, dropping out of the workforce. But by and large, if you're working, you're making your mortgage or your rent payment, you're shopping, you're providing juice to this economy. And remember, in the U.S. at least, 70% of our economy is driven by consumer spending. So you and I going to restaurants, buying new summer clothes, going to Disney World, whatever it happens to be, that drives 65 to 70% of our economy. So if we're out spending, the economy is probably going to do all right, and therefore stocks are probably going to do all right. Now here's one. This is a sad situation for those that sold their stocks and went to gold and went to precious metals. This is from January of 2012, and this is through mid last month. But it shows you exactly what's been going on and why it's been so painful for those doomsdayers out there and those people that abandoned stocks and went to precious metals because they thought the world was ending. Well, cash, as we know, has pretty much been zero. If you've been watching your statements, you see they're not paying anything to hold cash. Gold has been a very bad trade over the last year and a half. It's lost people a lot of money. Certainly by comparison, this difference here is 40% between just the average stock in the S&P 500 and gold. And this leads us to a conclusion here, and that is if you've been too conservative in this environment, you've got to throw in the towel and admit you're wrong. The world has not ended, and it's gotten a lot better. Now, does that mean you rush out and you buy stocks? You say, well, let's just take as much risk as possible? Certainly not. In fact, we talked about this in our most recent blog post, and I would encourage you to go out to our website and see a more detailed view of where we see things headed. But nonetheless, it's worse enough. It's bad enough to make a mistake. It's even worse to not admit that you've made a mistake and continue on. So it's time to draw a line in the sand. You owe it to yourself and your family. If you've been wrong and believe in the world's going to end, change course. Right? Get back into what a long-term sort of mix in your portfolio should be, and that's something that you and your financial advisor can determine with a little bit of work. But that plays into a bullet point that we're always going to show you, and that's create a financial roadmap. Create a financial plan. You will make far fewer mistakes by having a blueprint or roadmap that takes into consideration bad markets to prevent you from just reacting to headlines that are out there that we see every day that tend to scare us. With that, I am Mark Starosciak, and we will see you next time.